The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Hi everyone, Basil Chapman sitting for Larry Pesavento. My pleasure to be here. Larry is well on the way to mending, and our thoughts are with him. And let's go straight to the numbers, because what we have here is, instead of a very sharp decline today, we've just got it down 21. A reason why I say that is that the 120-minute charts on so many of the indexes and key stocks and ETFs were in what I call in the Chapman wave a peak D, E, or F. Most of them were at E and F. That's where you'd expect some kind of a pullback. I'd say that I thought there'd be a mild pullback into mid-session tomorrow. We'll see if that transpires. Most importantly, the Dows are holding well. It hasn't made a new recovery. I don't believe it's made a new recovery high. Let me just double check before I say that. I'm just going to check the Dow Diamonds, because I think the Diamonds have joined the Dow and making a peak A. I'm not sure they're going to be able to make a new, you never know in this market whether there'll be a new recovery high today. So we've got the S&P was much milder on the downside than the Dow before, then suddenly accelerated, but now it's back to down, just being down $1.88 at 1877. Comp index is down 20 at 41.41. Oh, now I can see why it happened. And the gold is up 4. And thank you, Al, my wonderful engineer there. I will have a sip of water. I'll have some English breakfast tea. There you are. Not sure why they throw it off and acts up like that. Feels perfectly fine. So then we've got gold up about $4 at $12.85. A very mild move in gold, but actually some of those little gold stocks acting. We tried to do my opening call. It's my daily service. We tried to nab one of them this morning. Did not succeed. I thought there'd be a little, oh my goodness, it's up from, we wanted it was closed at 351, this particular stock. I wanted it at, what did I say? It closed at 353. I wanted it at 349 or better. 351 was the low. Oh, got a little greedy there, huh? And now it's at 369. Very nice move. These little gold, little babies, some of them are acting very nicely. And the only reason why I wanted to even participate in gold on the upside at this particular point was that the gold stocks are sometimes independent to the gold itself. The gold contract was trying to hold steady after pulling back quite sharply. Silver's up 0.07 at 1946. I'm not even sure how much it's got in the way of legs to the upside. You've got crude oil down 9 cents at 101.66, and bonds up a half a point at 134.5. Dollar is now, it's down just a little bit, 0.09 at 79.90, and you've got the euro up a little bit at 1.3820. This is what I was asked if I would do. I got a couple of things. One is the IBB, the iShares of the Nasdaq Biotech ETF. What was the question? Question, Basil, for the next hour, in the next hour, is IBB now a defined peak F in the monthly, and we should look for lower lows in the months to come? Great question. At this particular point, I have absolutely no reason to call it anything other than F/B. I need to wait for April to finish. That's a week to go from today. And then I can talk about it having made either where the price closes. I can then define it and say, okay, now I think we've made a peak F, which is very serious. It means time and price to the downside in all time frames, especially the monthly, and that there should be a pullback towards the 200 to 175 area sooner rather than later. That was my anticipation, and I'm staying with that just right now. It turns out that in my opening call, we shorted the IBB. We had a number of shorts that most of them worked, so some of them didn't work, but the way we traded it was that I wanted to add to positions. Well, we kept the core position 1/3 from the short, just to like 3 points off the top, 275.40 was the top. We were in at 20, 271.20, and we are holding that core short position. But what we did at the lows is we went to the long position with the 200% long, and that's what we are still holding. And that particular position is right now at 76.23. That is up 8 points, I believe. Almost, yeah, 8 points, over 10%. So it was up even more earlier this morning, way more. But I'm anticipating that the IBB has a bounce, and I've drawn it in the weekly chart. And it says, yeah, the IBB could even move up to the 240 area. Right now, IBB is trading at, to be current, it's trading at 231.95. A little bit under the one you see on the chart here. I'm a little bit, this is from yesterday, the chart that you're looking at, but it's a weekly chart, and it shows you the very important cone formation, this expanding cone formation that broke out to the upside. Now it's come back down to test umpteen times. It's tested this particular level. It went down to 207.48 last week. Nice bounce. I'm expecting that it's going to make an arch formation and turn around, but that's what I'm expecting. The fact that we are in the long position means that I've got a little bit of leeway in which to think about it, in which to be able to form more of a substantial both position and analysis, and therefore I have to wait for Friday for the weekly chart to close so that I'll be updated later this afternoon. So it's just a little technical glitch I have here. And my monthly chart says, wait until the end of April. Anything can happen. We've seen amazing things happen in the last day or two of monthly charts. So I'm not even going to say anything other than at this particular point, the on-balance volume gave a huge reversal signal. The stochastic is down, but still strong at 85%, but way off the highs of 90. What was it, 95%? 95, yeah, 95%. That's really high. And then the MACD fast-moving average. Remember we saw that in silver? You remember SLV? Remember when silver made its top? And I said, yep, it looks like a peak E, but I'm waiting for that M pattern that's possible in the fast-moving average of the MACD. The same thing happened in gold. You remember? We were looking at that. I had to wait for it to actually cross negative before I could say, okay, finally got the sell signal in the monthly chart, and then I had to wait for other things to get the sell mode. Well, this is going to be the same thing in the IBB, but everything about it, just the news relationships, the relationships of funding, of new buildings, new everything, of being the top employer. I believe that the biotech is one of the top employers of new personnel in Massachusetts area. Certainly it feels that way, which is great. I mean, I love that, but that to me also says, yeah, sometimes they get a little carried away at the top and they overspend. So IBB, make it real easy. A break into 250s, I have to say, whoops, we're going to have to wait for much more evidence before I can get a sell mode in the monthly chart. A break below anywhere between 218 and 215, and we're on our way headed to that most important uptrend inside track support. That's the IBB. Next thing I was asked about, let's see, Paul asked, can you talk about new housing numbers? Not many people looking to buy any houses, not good for economy. Well, I want to talk about that in other areas, because the home construction is just starting to flatten out a little bit. But most importantly, let me go to this chart right here. This chart shows iShares Global Timber and Forestry ETF, symbol is WOOD, wood, is trading, right now it's trading at WOOD, trading at 50.48. So it's a tad higher than what you're looking at. So far, it's held this up channel in the weekly chart, but it's made a peak F at 54.32 at the top. I'm watching this really closely, because if at any point, if it starts to even trade, doesn't even have to close, starts to trade in the 47 to 46 area, that's just saying be really careful. It's coming back down to this very important, that is the moving average line. That's the 200% that's coming back down, and you got to watch out because the left side low bar of the week of the 28th of June of 2013 at 43.86, that will beckon, as well as the 200-period moving average of 44.07. So I want to see what happens this week on Friday. Very important little indicator we got here. Wood. And the next thing is HGX, which is the Philadelphia housing, the Philly housing sector index. And it's trading at 200 right now. Oh, I can't go there. I don't know the symbol for it. But as of a couple of days ago, it's at 193.14. The high was 213.81 at a potential peak D in the weekly, having made a cup with a retest of the previous high of 209.29, so it went substantially above that in the Chapman Wave Cup and ladle breakout, but then it stopped at D. D is what you expect, and it pulled back. So if this particular index, and I'll do this right now for you, if I'm looking at Toll Brothers is trading towards the lows of this recent move. It's at 33.60, not good. If you're looking at Lennar is trading at 37.86, also breaking left side support. These are key stocks. This is very important. So I'm anticipating here, now I can go to an overview of what I'm looking at. I think that, housing. I have to stay on the one topic. My suspicion, based on everything that I track here in the Boston area, and Boston is always the late comer. It's always the last of everything before it changes. Remember, banned in Boston, eventually they had to change that. Well, I'm suspicious of what's going on here because I'm seeing all the signs that normally over the decades that I've been here of tops, when I see announcements, and this is the way it's always couched, either they need a new trade center because there is now anticipated hotel rooms. The hotel rooms have expanded. Now you need to, you've got the people, so now you can have it. And then when you get it, you say, now that we've got this trade center, we need to see more hotels built. Well, if you had to add up between the new condos downtown, just the downtown Boston area, between new condos and the hotel accommodations, we have got, this has to be the highest we have ever seen in the history of Boston. And to the way I read the housing area, I believe we're in for a glut. And when everyone talks about accommodation, affordable, let me tell you, it is totally unaffordable in many places, certainly not just in Boston, but in so many places in the Northeast and other central areas in the country, not necessarily always in the Midwest, etc. But I think that what we're looking at here is that we're getting really, really close to some kind of big resistance in the housing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hello, Basil Chapman here. We're going to go straight to Brent in Martinez. Hi, Brent. How are you?
I'm doing well, Basil. Good morning to you.
Good morning. You'd like to look at?
Sugar.
So are we looking at the SGG?
Yeah, we can look at the continuous contract. I quickly just wanted to thank you very much for your generosity and just your thoroughness. And anytime you go over whatever I ask you about, I'm really, very appreciative of the time you take and just the effort that you put into anytime anybody calls. We're very lucky to have you.
No, thank you very much. I do appreciate that. Thank you. So in your so do you have the sugar contract or is it the SGG?
I'm actually using calls on the SGG, but right.
Okay, that's right. I remember that we were using the SGG. I just wanted to double check because I don't have a SG. I have. Well, there are a couple of patterns that I want to look at regardless of where the price is right at this particular moment, as long as it's within the area. Do you have the current price of sugar?
I have, I believe it's the May contract is around 17.45.
Great. Okay, as long as I know that. Because in the patterns that we were looking at, remember I spent a little time talking about the monthly chart, and I based it on the continuous contract, which should be very close to any contract that we are looking at. The most important thing is, I've been doing a ton of work just recently on how the patterns unfold and how the stochastic. I've always done this, but what I've done now is I've related it to price movement much more than ever before. And if you're looking at my monthly chart of the continuous contract of SB, and remember, folks, this is not updated. Sugar contract, sugar trading now. I'm not sure what the differential is between the continuous contract and the actual contract itself, whether it's May or, let's see, May about to expire, SBN, or the N contract. It doesn't matter because I've already found, I know some people do work on the continuous contract and they're not all that happy. I've been very happy with my continuous contracts as long as I know what I'm doing and as long as I appreciate that the price always changes but not the chart pattern. That's the most important thing. So now what I'm looking at is that the pattern that I discussed with you, remember I spoke about the monthly having a very narrow down channel that took time. It did take price, but mostly it took time. It took all the way from back in July of 2011 to January of this year, this is a monthly chart, to establish at least a little bit of a turnaround. And if it's trading at 18, then I'm not sure what the continuous contracts are trading at, but the high was 18.47, so I suspect that we're getting real close. If in this month there's a pop-up, it just extends this leg. Now, what's really important, if you're looking at the MACD, you see the way that the fast-moving average is getting closer and closer and closer. The histogram, those red bars, the vertical bars right there, I'm going to make this bigger. I'll expand it. That way we can all see it clearly. The histogram, those not those are big ones, the gray ones are volume bars, but the little red ones right there, the histogram starting to get close to the 0% line. It's at 0.16, minus 0.16 right now. That's the monthly chart. And I because I haven't updated, maybe by tomorrow if I update, well, this afternoon when I'm updating, I might find that in fact the MACD is about to cross positive, but I still have to wait on the monthly chart for the end of April. That's number one. Number two is, when I'm looking at this, there's been a very steady rise in the stochastic since back in May of 2013. Every single month, you've got the MACD starting to bottom out, but the stochastic has been rising. That is, in fact, is internal strength. And what I'd say to you is my experience with this narrow channel. For some reason, I don't know why, certain things stick in my head. I don't always write these down. They just stay there, and then they pop up at a certain moment of importance. Merck, way back. I wonder if I could even find it here. I'm just going to do something for interest's sake. Oh, I probably have to go to a daily chart. I'm just going to try this. So here's Merck. Trading at, 57.29 as of when I last checked it out. I'm just going to squeeze the chart to see if I can recognize this pattern from way back. Yes, there it is. Back in 1994, when Merck started a very nice move, the daily chart just went up in this, what I call, it's like a little worm pattern. I'll be back. Can you hold on?
Absolutely.
Okay, great. And I'm going to talk about this pattern as it relates to sugar. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire, so now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Those emails kept coming in there for a question about UTX almost at high. So, yeah, that's a great question. And another one is, I'll elaborate more on the housing, but I'll keep doing that. There's no real rush to do it. I don't see a major top yet. I see it, all the signs are there, but I don't think it's there yet. So let's go back. We've got Brent online. We're looking at sugar. I'm looking at the monthly chart, and what I was saying is that the pattern that I finally came up with is like a little tube, and you've got this little worm. It doesn't have to be a tube. It's just a little worm keeps climbing up the tree at what I call walking the 9-period moving average, but it's in a very narrow range. It doesn't go very high. It doesn't go very low. Just continues over and over and over, making the same move to the upside, pulling back, same move to the upside, higher highs, higher lows, just keeps going. Well, then I noticed that on the downside, and I always wondered what happened when you made a top after that. Well, tops after that are a little complex, because what happens is you get one very sharp move to the downside, and then it tries to retest it and makes a little cup formation at the top. There's a little difference on the downside. What happens very often is you get this wiggle to the downside, and then out of the blue, it just happens. You only see it afterwards, and you say, oh, man, that was just the greatest move. That's why I'm pleased that you're in the trade already, because if it's going to succeed, if there is a move to 1963 on the continuous contract, I wish I can't do it right at this moment to see what the relationship. I think it was close, within about 50 or 60 cents. I think that was the case from the continuous contract. But if there is a move, I'll give you the date. If there is a move that goes into the body of the candle of October of last year. And the body means that, in this case, if you look in the continuous contract, around about 19.70, there's a real good chance you're going to take out that candle high. If you take out that candle high, there is enough evidence in my work to say that when you take out from this very, very extended to the downside narrow channel, when you take out a significant left side high, in this case it would be this one here, from October, you should be able to travel quite quickly to at least the next peak on the left side. And that would be a little mini one at 2262. That was the high of October of 2012. But it's really the candle of July of 2012 at 25. That's the speed that it happens. Now, I say to myself, well, sugar, in this environment, you've got all these alternate things, and I don't quite understand it. I'm just looking at the chart, and I'm saying, that's the pattern I would expect. What you've got to watch out for is if there's a rally, and then it reverses, and it closes, and it goes back into this channel. In other words, it takes out the low of this month. That's at 1650 on the continuous contract. You're just stuck. This can go on for another few months before it even tests the upside. So this is very critical. I'm pleased you're on the call side. I think that's the right side for the potential to move higher. The candle of this week, 18th. No, that's not the candle of this week. Candle of this week. Whoa, this is great, because the candle of this week says that if you take out 1724, the high of last week. Now let me go to the contract if I can. No, I won't be able to pull it up. I can't pull it up. If you take out last week's high bar, close above last week's high bar, that gives you another week of going slightly higher before you want to test the lip. Oh, I like it. I think you've got yourself a potential for a very nice position that could be favorable in the monthly chart, and that's really what I'm looking at, because I want to deal with the pattern that I'm looking at in the monthly, and very simply put, the 200 period moving average is at about the height of the high of the week of the 7th of March. So you want to see that all taken out. The moment that's taken out, boy, that's nice action. I hope that helps you, Brent.
It does very much, Basil. You have a wonderful day, and again, I really appreciate your help.
Thank you very much. Thank you for calling. I always appreciate that. That was Brent in Martinez, California. Looking at sugar, I was looking at the continuous contract. I want to go back for a moment. I want to talk about the HGX index. I want to look at it in different time frames. The pattern that we looked at most recently, and I can't find it on my on the alternate services that I've got running right now. I just don't remember the symbol offhand. What I'm looking at here is that if the HGX index, which is the Philadelphia Housing Sector Index, if it holds and rallies back in the next 6 weeks, give it 6 weeks, give it until, I would even give it to the first week of June. That's fair enough, I think. Yep, that's 6 weeks. The first week of June. If it's able on that candle, even if it's just the first day of June, to even get close to testing 209 to 210, the all-time high was 213.81 on the HGX index. If it gets even close to that, it makes the pattern that I'm looking at with the cup, you can call it a rising cup and handle pattern. It makes it very positive in that it says that the weakness that we have just seen was not translated into the key housing sector stocks. Remember, I'm looking at this. It's behind. It's not even a day or two behind. It's from the 17th of April, so it's quite a few days. I don't know where it is trading right now. But most importantly, that pattern will break down, and that's really what I wanted to emphasize. If it takes out the low of the December low of 182.45, if it does that, there's a good chance it's going to test the 170 to 163 area. 163.35 is the 200-period exponential moving average, and the MACD is at 82%, but turning down quite sharply in the fast-moving average. And the MACD did not go even close to its previous high when it went to peak. I'm calling it peak F for now, 213.81 back on February of this year. And most importantly, the RSI is starting to fail. On-balance volume, I don't have volume for this, so there is no on-balance volume. More importantly, you've got that capital A pattern in the weekly chart, and the left side low bar of 190.08 made on the week of the 31st of January. That's being tested. If that breaks decisively, problem is you don't have much support until you get to 182.45. So I'm rather negative on this particular pattern right now. Unless it can get to, as I say, it needs to bounce really strongly to help that weekly chart pattern. And at 198.39 is the 9-period moving average resistance. So that's what I wanted to look at. So that was the one question. Oh, the UTX question. Now let me go to UTX. This will be, I believe it's only 1 day behind UTX. Is that 1 day behind? 22nd, 23rd. Yes. 1 day behind. Oh, all time. Now this is, I'm so pleased you brought that up. That this is leg C in the weekly. Now, why am I happy about that? For two reasons. One is the pattern that I've been talking about for so long that says a breakout means that I've got to have an alternate count. And now you can start to understand why it's so important in my work that I'm not narrowly focused. I'm able to very comfortably put G/B. If there's a 1 penny move above 120.49 2 weeks later, it's a weekly chart, it means it's leg C, because you can't go GH, there is no H, and there is no other count. So this is very positive on a weekly basis. It says there's a good chance that we could go into early May. Remember, riding high in April, shut down in May. Riding high in April, shut down in May. So look at the S&P, SPX.X. There's the same thing. If we go to a new high this week or next week, that makes not G. I have to think about calling it C. There are enough charts that I've had to do that with that I'm feeling more and more comfortable saying that this is probably not G. I don't know yet. The week's not finished. We've still got 2.5 days to go. Thursday, end of today, whole of Thursday, whole of Friday. And if by that point the New York Stock Exchange has gone above 10,669.43, you just need 44. And that starts leg C because you can't get an H. My bias has to be to the upside. My preference is to take the low of the week of the 7th of February in many of these charts and call that not just a low, but the low for the weekly charts, expecting that we could get to D. And that tells me that the downside, just for now, is going to be very, very limited, which tells me that I have to constantly be thinking of the long side in this market rather than the short side. I even took the short side right off for those sentiment indicators and things. I just don't want to be thinking about that right at this particular point. That's number one. Number two is in the smorgasbord of stocks that you can choose, when you're looking at the momentum stocks, let's just include something like BIB. This is, and now it's not updated. I'm going to have to go to this chart over here, BIB. BIB trading right now at 301.26. This is Biogen IDEC. Now, 301 puts it up into that area, but it had gone higher. So you can see when I talk counter trend rally, I talk about a stock that probably has made a more serious top. It could participate in any rally right now because it's been from 359 down to the low of 272. That's 90, let's call almost 90 points. That is a huge move. That's 18 to 20% for Biogen IDEC, one of the very best of the biotechs. Look at Gilead Sciences trading right now at GILD. Trading, oh, look at that, 75.25. That's what's helping the IBB move so nicely. So it's trading at 75.25. My last update was, I think, yesterday. Yep, yesterday, the 22nd, with a doji candle. Now it's up there. It's testing that's what I'm talking about. The left side highs of 75.25, twice hit back in April, beginning of April. That was the target on the upside, and it's already achieved that. And that's in leg A. I don't know if this is going to go to a B, C, or D. I'm suspicious of this as a counter trend move in the weekly chart, and that says to me that there's a good chance it could go a little higher, but it probably will not go to D. It'll only go to C and then fail. I don't know. That's my anticipation. I can't see it even in the weekly charts. This is just rebound territory. There's nothing here yet. So I'm looking at it and I'm saying, Celgene in the den question. Yeah, Celgene, CELG. Let me just go to the updated price on it. CELG, trading at 146.16-ish area. 146, huh? Yeah, there it is. So the Celgene could very well test the 147.93 high of the 10th of April. And that it could even go a little higher. There's no reason why it shouldn't. It's been decimated. I mean, I shouldn't say decimated. That would imply that it's taken like a 60% hit. But it has. This is the deepest retracement that Celgene has had ever. In fact, almost all the biotech stocks, this is the deepest that they have ever seen anything like it in such a short period. Celgene did go from 77.39 back in 2008 all the way down to 36.90. Oh, that is definitely 50% area pullback. So it didn't do the 50% area, but look, it took much longer. It took 1, 2, 3, 4, 5, 6, 7, 8 months. This is only 1, 2, 3 months from the high. So it's a different time frame. But I'm suspicious of this. I think that we made a pretty serious top in most of these biotechs, and this is a counter-trend rally. So that's what I'm looking at. And Celgene could even go to the 149, 151 area before it starts to reverse. Now, question in the den. Duke Energy, I've not updated that for a while. So I don't know if it's worth my while. DU, no, I really haven't done it for ages. No, I can't get it. So that was that question there. And Duke Energy is trading right now at, whoa, nice chart. Made peak A, B, C, D, E. In leg E, it's just had a very sharp pullback from the 73 area to the 70 lows, mid 72s, trading at 72.96. Nice chart. Oh, I remember looking at this chart. Oh, I wish I was online right now. I'd be able to look at the different. I'll show you something very interesting. Remind me tomorrow. I'll be able to do that. Thursday. These are the energy, Duke Energy. That'll remind me what I'm supposed to do. Okay. Hey, how about this? A question about the QQQ. Oh, this is exactly why I want you to do Larry's show. I want you to show something very interesting. I want you to show the chart formation that says in the expanding wedge formation, just as we look at it as a narrowing wedge, there is resistance in the Qs at the 89.04 area. It's trading at 87. Let me just update it. QQQ. I'll be right back. We'll deal with this when I get back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Folks, stay tuned. Daryl Martin, great show. Just another way of looking at markets and trading markets. Just fabulous. Had a whole bunch of questions. So let me just say that the QQQ trading right now at 1, 2, 3. The QQQ is trading. They made a peak D from last night. I don't know if they've gone above 87.75, but well, maybe I should just check it out. QQQ. No, it didn't. 87. No. So this is still in the 120-minute chart peak D. 88.14 is the level to pierce. The moment it breaks out above that, it's kind of it's going to be quite easy for it to get to the all-time highs. The support it has to hold is 87.09. I was asked about Apple. Apple right now is trading at APL, trading at 520. Let me just double check. APL trading at 529. Made a peak D. That's what I was saying. That's why I expected today to be a consolidation day going into tomorrow morning. Now the question is, what Apple comes out with earnings after the bell. You know, I've just stopped doing this. I would say to you that if Apple had no earnings at all coming out, if Apple wasn't coming out with earnings, wasn't coming out with earnings, my suspicion is that Apple wanted to trade towards the 532 to the 537 area. Then you got to be real careful. That's where there's a lot of resistance. That's number one. Number two is, if Apple was to gap down tomorrow, and I just don't know how they're going to organize it. There's no news. There's no people. You go to an Apple store now. There are not that many people lined up like there always are. I suspect that Apple is just in a big trading range. That's what I'm thinking, that Apple might bounce, but it's really stuck between the 550s and the 500 area. and probably it's going to go towards the lower end at some point this summer. That's just my thinking, but I wouldn't trade off that for today's announcement. Then I had a question: what's the daily chart? The Dow is in leg B. Most of the others are in leg A, but this is underneath the previous high, so we've got to be real careful. But I can just tell you this, that at any time in the next 3 days, if the Dow goes above 16,631, doesn't have to close, it just has to go above there, I'm thinking we will get a C and a D going into late next week or the beginning of May. That's late into next week, which is the beginning of May. Any other questions there? No. Now, as far as the housing is concerned, next week I'm going to try to put together a more concise numbers. I like to use numbers, and I haven't got them off the tip of my tongue right now. I want to use numbers, especially in the Boston area, and we'll talk about things the way I'm seeing it and what could happen. But I suspect that this market has the potential, the whole market, including the fact that we should see an unbelievable sum of money being spent on a single home in the next 6 to 8 months. And there'll be an announcement. People will just say, what? I mean, there's a house being built just up the road here. I walk past it. I keep saying, is that a hotel? Is that a house or is that a hotel? I mean, people are going nuts. And, that's the era we're in. So the nuts era is going to have us an announcement of a house and then an announcement of a skyscraper. Those are the things I'll be looking for, but we haven't got there yet. And so now let's just do a couple of things here. The volatility index at this particular point is at 13.19. I'm going to try to get something done without today's data. So 13.19. Wrong one. I don't know what the VIX is. Maybe someone can tell me what the VIX is. Anybody there quickly before we sign off? You got a VIX? Anyone? I just wanted to see. It should be up. It should be about 1330 by now. And watch that volatility index because that's going to tell us 1365. Okay. So I'm looking at the VIX. It has to cross 1421 to 1466 at any point in the next few days. If it does that, this market then will take a bit more of a tumble. Right now, I just think this is a consolidation after a great move. We'll see what happens Thursday into Friday. So I don't hear the music. I think we're going to be signing up at any moment. There it is. There's the music. So Basil Chapman, this is my service, is the opening call. Check it out, front page of TFNN. That's some really nice trades. Got some nice trades going on. Took some profits in one. I'll be back tomorrow. Thursday. Have a great day, and thank you for being here.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.